Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. It's Wednesday morning, March 24th, 2021. And the theme of the day, the theme of the week, probably the theme of the last 3 or 4 weeks is in the stock market, we have a lack of price action right now. We have mostly stocks kind of drifting on lighter volume. We're not seeing consistent momentum. We're not seeing consistent pullbacks even to buy into. We have one or two today that we're going to talk about. But the biggest challenge right now is that the tape is very, very lackluster. So in other words, we want to trade when order flow is obvious, and then we dig a little deeper into our tape reading skills, and we try and find stocks that are reaching points of where they should surge higher or where they've already pulled back. We see a little bit of profit taking, and then we look for a new spot to bid. And we actually have one stock that I'm going to show you that's a good example of that today. So smart trading right now. Now, again, everything we talk about is for educational purposes, but smart trading right now is not to get involved heavily unless your stocks are showing price action on the tape. A lot of stocks are kind of just drifting back and forth, especially if you're day trading. Be super diligent right now in your position sizing so that you don't have too much share size in this type of market. This is the market where you end up seeing a stock break out. You buy the highs, it drifts back. You short the lows, it drifts back up higher. It's very frustrating. So the smart play right now is position sizing a little bit lower and being very careful. There's certain environments where trading breakouts is a better situation and trading pullbacks is a certain situation. When the market's obvious and we have leadership, those are the type of situations where breakouts follow through very quickly. The market that we're in right now, which we're actually going to take a look at in a second, lacks leadership. We do have some exciting stuff that we're about to talk about in the tech stocks where we have some tech leaders actually showing some solid relative strength. We have some retail leaders showing some possible reversals of the downtrend that they've had for the last 3 or 4 weeks. And we also have some other picks that are lining up with some pretty good swing trades. And I'll show you what the price levels are in those as well. Had a good question yesterday about the difference between swing trading and day trading and how would you know which one matches each criteria. I was trying to think of the right word. And essentially it comes down to this. If I like a trade as a swing trade, I will also like that trade as a day trade. If I like a stock as a day trade, that does not mean that I would like that stock as a swing trade also because of how far the stock might have moved recently. So again, if we have this much profit potential in a swing trade and it's already gone that far, I'm not going to take that swing trade, even though the stock is still obvious a buy. So I might day trade that stock, but the swing trade's not on the table. But the opposite of that is if we have it down here where this is the buy and this is the initial profit target, there's plenty of room. There's plenty of meat on that bone, right? So in this case here, I would swing trade it and or day trade. And this is something that a lot of retail traders aren't really familiar with as a full-time day trader. You might not be carrying overnights, which a lot of day traders don't. And let's say that's the swing trading potential. You can day trade it day 1, day trade it day 2, day trade it day 3, up to where you believe is the profit target. And that's a big part of trading too, is understanding how to set initial profit targets. So I just wanted to give you a little bit of trading education there as far as how to assess the differences in a trade that might be a swing trade versus a day trade. And here's a big thing. You need to know that before the trade. Knowing that after the trade will have you entering a lot of swing trades too late in the process, but it also opens up a lot of new day trading opportunities because if you do your game planning for your trading game plan at night or whenever you do it, you'll open up a lot of swing trading opportunities, and then you go in and dive in a little deeper to see if they match your day trading criteria. They might not. The spread might be a little bit too wide. You need to watch the stock a little bit too. So the spread is the difference between the bid and the ask when you're watching your trade. And the wider the spread between the bid ask, that means that it will be a little bit more challenging to get out if the stock starts to move against you because you're paying the bid, or selling down to the bid as it moves against you. In those situations, good active day traders want to sell into momentum as opposed to chasing it to the downside and paying the difference between the bid and the ask. So a little bit of trade management there, a little bit of trade selection there, swing trading versus day trading. So we're going to hop right over and look at the market right now, and then we're going to break it down. And I'm going to give you a visual illustration of the differences between the market looking really good versus lack of sector leadership and why that's leading to especially day traders being a little frustrated and swing traders not having that really solid follow through. Most of the ideas that are following through right now are heavy news plays where it's getting a nice run for 2 or 3 days, but even those are kind of drying up. Crypto stocks have kind of like been out of play for a while. Cannabis stocks have been out of play for a while. Solo stocks have been out of play for a while. Electric vehicle stocks, even Tesla was take a hit yesterday. So you really need to be a sniper right now. You really need to be in the right ideas, which means that you need to put that extra time into your game plan. And if you don't find 8+ ideas, there's nothing wrong with being in cash. You don't want to dig yourself a hole and then all of a sudden the market picks up, becomes obvious. Now you're digging yourself out of that hole instead of being profitable. So be smart, and there's nothing wrong with being patient. That's smart trading. This week, this month, it's only a blip on the long trading year that we're going to have here in 2021. So we're going to head over to the markets, and we're going to start out with looking at the SPY. So as we discussed yesterday, the SPY still looks strong. It's still above key moving averages. The trend is still clearly pointing up. The problem that we're having right now is this. We're having much heavier days, and we can zoom this out a little bit further here. We're having heavier days on bearish days, meaning selling days where you see red candles, and lighter volume days when the market's rallying. That is not the recipe that we want to see. That is not the market analysis that you feel, yeah, I have conviction. I can't wait to get in here and buy aggressively. That type of market environment, that type of situation is when you're buying breakouts and they fail. You're buying breakouts and they fail. And I think a good example of that, we were watching Wayfair yesterday. And just to give you a breakdown as a day trader, this is the breakout and this is what happened. So in a good market, that does not happen. In a good market, we open higher, the bids come back in and they hold the bid and push it to new highs. So that's a good example of what I meant, that you need to trade the right type of setup in the right kind of market. So right now we're in a little bit better market. We're buying the pullbacks, has a little bit of a better risk profile in exchange for where the stock could go. And I think this is a pretty interesting illustration here too. You know that profitable trading, you know in the history of Wall Street, it's easier to find winners when there's market leadership. And that's really what we specialize in. I don't trade penny stocks. I don't trade OTC stocks. I am only looking for the leaders in the leading sectors and in the leading industry groups. It's a classic way of trading. It's a way that's worked for a century. But right now you can see, even going back over the last month, which in this window is the last 21 days, there's not a lot of clarity. And going back probably utilities and industrials, and then you go to the industrials have actually taken a hit over the last couple of weeks, over the last week or so. So one day, and you can see the industrials down here, almost 3%. So despite the fact that they're strong over the last month, they're actually weak over the last week. So we're lacking leadership, which should influence your position sizing, and it should influence your activity level. And I just can't say this strongly enough, and I talk about it in our boot camp all the time. Be smart with your position sizing. If you're not getting follow through, be smart with your activity level. You don't have to trade because the market's open. You should trade when there's something great going on. We're taking some trades. We're taking some swing trades. We're taking some day trades, but reduced exposure because of the lack of follow through. Something else to talk about today is we have some economic numbers coming out today. We have what do we have coming out at 8:30 today? We have durable goods orders coming out, and then purchasing manager survey at 9:45. Both of them are supposed to be good, especially durable goods should continue to show growth over the last 10 months. As far as earnings are concerned, we actually have some plays from yesterday. If you were a member watching these videos yesterday, we talked about GME stock and the fact that the odds of follow through at the current levels and guidance were very unlikely to see the stock rally, and right now it's down 13%, down 24. Didn't need to be a rocket scientist to figure that one out. That was just at the current levels, the future guidance, the earnings per share, it just didn't make any sense. The fundamentals of the business have not changed that dramatically, other than the shenanigans that we've seen in the stock. The opposite side, we're looking at Adobe. Adobe is actually up at this point. It's up $4 pre-market, so we're getting some good follow through. Now, I want to make it clear, the Adobe play is off of earnings, and we're looking for follow through. The daily charts just started to perk up. The weekly charts barely going well bid after 2 weeks of indecision. So again, it's a solid play. You have an earnings catalyst, but you don't have a lot of order flow. 475 and then 500 are the next two levels there. Okay. But shifting over into tech stocks, we got some some really good short-term order flow in some tech leaders. So specifically, Facebook had a really nice 5-day run. We actually said we were watching this 285, 290 level, kind of hovering right there. So above that level, we're looking for that to head into new all-time highs, which is actually pretty encouraging. Microsoft also finally punched through a level. Again, you can see here, this is exactly what I mean about the failed breakout. So we zoom this out a little bit. Good markets, these breakouts follow through and you start to see new all-time highs. So this is where you want a little bit more confirmation. You want to see it close above that level before you start to jump in. And then working our way over to Amazon. Amazon actually heading up here as well, but it's up actually $22.50. Amazon actually had good news yesterday where they've just named Adam Selipsky as the head of AWS coming over from Salesforce. But I think one of the bigger stories today is Intel, which actually took a heavy hit yesterday, but now is actually up even more. And actually, look, we've actually been trading this stock a couple of swing trades over the last week or so. I just want to give you the visualization of why. Stock rallied hard off of November and kept going and actually reached the 64 level. That was a breakout level for us. Stock took a little bit of a hit yesterday, but now it's actually up 5% again, trading right back up to that 66 level. So Intel is actually going to be at the top of the list as well. If you want, I'll post the link to these articles below. But the Intel news is pretty big. They're actually going to get aggressive now, and you can see the size of the investment plan, a $20 billion investment plan. So those are the plays that we have, economic data, earnings plays, some tech stock plays, and the tech stock that we're going to be watching the most today, I think, because of room to go, is Intel. Some other trades that we're looking at today, Trip actually is one of the ones that I said you want your stock to be active. You want to see your stock in play. It's very strong coming off of the pandemic vaccine news, rallying with a lot of the get out of the house stocks, the airline stocks, the cruise lines, the casino stocks for a little bit. They're all taking a little bit of a hit right now, but I love the fact that the stock actually pulled back, had 2 days of exhaustion, and now I'm looking for the stock to actually find support at yesterday's low and then look for a new rally higher. So you got really tight risk there. Maybe $1 you're going to end up risking on the trade, looking for it to make new highs and take off again. Walmart and Costco, two stocks that are showing what we've been talking about all week, which is a potential change of trend from the recent selling. This one's going all the way back from November, where a lot of the energy stocks have been in really good, solid, bullish rally since November. Some of these retail stocks have not. Costco now is actually showing signs of life. We're showing 3 well-bid days in a row. We're showing some good closes near the highs. Not quite a reversal yet. Costco needs to get above this 135 level. Walmart. Costco is actually showing a little bit better relative strength. Let me show this one here. You can see here where now it actually is right at the precipice of breaking. Now, if you know classic technical analysis, this is actually a 1, 2, 3 bottom, and the 233 level was the breakout there in Costco. So keep an eye on these two big box retailers, Costco and Walmart, because they are appearing to show some smart money accumulation, and we're starting to see a move back to the upside. VIPS is one that a few members in our community have been calling out for a couple of months. And we have a few members that have been holding this one for a while. By the way, if you want to find out being a member, click down below. And this one just keeps chugging along. Look at the amount of closes above the opening price. And this thing is just now pausing for another 3 days. You could actually initiate a new swing trade here as well. LOW is actually another one that we've had this breakout level. It's holding the breakout level, but like a lot of the other stocks we're looking at, it's not giving us that clean push. It's not giving us well bid closing near the highs with confidence. So we haven't started to scale into this position. We're working the trade up there again. And last but not least, CSIQ. Even though it's a solar stock, we actually, again, if you look at the recent price action, this is the downtrend. It broke the downtrend here at 47. And now if it stays above 50, we can have a confirmed initial start in the opposite direction. So the biggest thing I want you to take out of today is obviously the last few weeks, especially if you're actively trading. It has been a little frustrating. Breakouts haven't failed. Pullbacks kind of melt down. The financials had a little bit of, let's say, bad news last week with the requirements. The circumstances have changed a little bit. The bond yields that everybody's watching have pulled back for 4 days in a row, which is actually good news, but the market did not exactly spike to the upside on that news. So be smart and preserve your capital. You can do that through position sizing. You can do that through activity level. But until you start to see significant or above average volume, and we usually use the average of the last 20 days to determine what that volume is, be smart. Be smart that you don't have to trade. Preserve your precious capital until better circumstances. And I gave you some clues there. Take a look and see if there's anything leading the market for more than 1 day. and then you could raise your conviction level just a little bit. So if you find these videos helpful, definitely click down and subscribe. Give us a thumbs up. I'd really appreciate it. And it will also tell me what kind of content you like as well. And also leave a comment below about anything that we talked about today. I'll definitely have it back and forth with you too. So have a great day, everybody, and I'll speak to you soon.